America's Commercial Real Estate Show is brought to you by Bull Realty. When your business requires proven performance, visit bullrealty.com. And Arnold Golden Gregory, a law firm that makes a difference. Visit agg.com. And Cone Resnick, providing forward-thinking advice to help navigate business and financial issues. Visit coneresnick.com. And by France Media, providing exposure to the world of commercial real estate. Visit francemediainc.com. Welcome back. I'm Michael Bull, and this is America's Commercial Real Estate Show. How would you like people to come to your website to hear the Commercial Real Estate Show? Well, you now download a free widget allowing your site visitors to access show videos and audio podcasts right on your website. Just visit commercialrealestateshow.com and look for the widget on the homepage. You can see how it works and easily download it to your site, and after you load it, it works automatically. Well, today we're discussing commercial real estate market predictions for 2013. Well, my next guest is Michael Bull. That's right, yours truly. I'm going to share my view of the market and some strategies for 2013. Since I typically tell you a little bit about my guest, I'll share with you why I get asked to write and speak about commercial real estate subjects. And, well, the reason is I stayed at a Holiday Inn Express last night. Okay. So, yeah, that's the real reason. So, and they just drug me off the street here on Peachtree Street to talk on the radio. So that's what happened. Well, actually, I've been in the business for 30 years. I've been involved in $3 billion in transactions. I'm the managing broker of Bull Realty, which is a regional commercial real estate brokerage firm. So I see the market firsthand every day in my day job. We advise companies and investors. We help them buy, sell, and lease all types of commercial real estate pretty much in every sector. We're headquartered in Atlanta, Georgia, and most of our business is throughout the Southeast. We also have done significant deals in Phoenix, Texas, and Pennsylvania. We help clients with single-tenant net lease properties all over the country. And then there's this gig, right? As host of this show, to prepare each week, I spend a lot of time studying the market and also have the opportunity to interview the top analysts, brokers, and market participants every week. So I see the market from a lot of different angles, including an owner's perspective. I also own properties. I have seen several cycles, including the 1986 tax law changes on depreciation, which at the time really devastated the apartment market and the S&Ls. I've worked through 17% interest rates, believe it or not, and previous cycles where lenders were most of my seller clients. Real estate always cycles. This one, however, is deeper and it's longer than any we've seen before. The good news is for people like you that are smart enough to do things like listen to this show, right? Well, you can see opportunities. You can also see proper timing. So I'll share some market predictions for 2013, and I'll share some opportunities for 2013. Let's start with the apartment market. The multifamily market will continue to do well in 2013. We've all heard it. We all know it's the darling sector in the business. Well, part of the reason for this is really the rose is off the bloom of home ownership. Many would-be home buyers have seen the foreclosures. They've seen values fall. Frankly, they'll just be slow to jump back in the home ownership. Plus, lender underwriting remains tight. Another reason that some people may not think about is the job market. There are many employees who still are waiting for a stable job. They may be afraid to buy when they don't know if they're going to have a job. Or also they may be looking for the right job. There hasn't been a lot of job movement, so there may be more employees that are moving after the market stabilizes somewhat, and then they may start to look for buying a home. Having said that, there are many markets where Class B and C and older apartments are recovering more slowly. So apartments doing great does not mean jump in the market at a 4 cap on a Class A project or jump in at a 7 cap on a B project. You want to look at the individual market, and you want to look at the property very closely. Apartments do offer investment opportunities from better management, which makes them unique, especially in the B and C properties and smaller properties where property management can make a huge difference. If you know how to manage better than the previous owner, or you know someone who does, look at apartments in 2013. Well, what about the office market? Well, the office market should continue the slow recovery we've seen in the last few years. The job market will not improve much in 2013, regardless of who wins the election. Your government spending will need to pull back, which will affect GDP. as well as government and private sector jobs. The concern over Europe and the deficit will continue to hamper job growth. So while the office market will improve in cities with strong job growth and high barriers to entry, many markets will just continue to improve slowly. Some of the improvement in the office market is really from lack of new construction. In that way, the commercial real estate market tends to take care of itself a little. There are lots of opportunities in the office market. One is if you own or run a business, lock in long-term leases now. With the lack of new construction, you don't want to be negotiating for new space in 2014 and 2015. Plus, if it works for your company and you can find the right location for your business, consider taking advantage of these prices and low interest rates and buy your office property. Lenders love owner occupants, and your business can be a very safe tenant, right? Your business is going to pay. And if you're an investor, look for properties in locations you believe will see good job growth. Okay, we're going to take a quick break. And when we get back, we're going to look at the industrial market, the residential and home market, and the retail market. Stay tuned for more 2013 market predictions. I'm Michael Bull, and this is the Commercial Real Estate Show. We'll be right back. America's Commercial Real Estate Show is brought to you by Bull Realty. When your business requires proven performance, visit bullrealty.com. And Arnold Golden Gregory, a law firm that makes a difference. Visit agg.com. And Cone Resnick, providing forward-thinking advice to help navigate business and financial issues. Visit coneresnick.com. And by France Media, providing exposure to the world of commercial real estate. Visit francemediainc.com. Welcome back. I'm Michael Bull, and this is America's Commercial Real Estate Show. We have some very interesting shows coming up for you, including a show on social media for business, a show on environmental strategies, and a show on retail real estate. Be sure to catch shows of special interest to you. Sign up for a once-a-week email announcing the show topic at commercialrealestateshow.com. Well, today we're discussing 2013, what's going to happen, and what are some strategies for you. Well, let's look at industrial. And it's a good time to buy industrial, and this is why. We've had several quarters of positive absorption. And like the office market, we've had little to no new construction. The increased internet shopping has created demand for industrial space near major cities. That should continue. There are also opportunities in industrial for all size acquisitions, from institutional size assets to smaller properties, because of another reason. I think the industrial market will also improve because of the single family home market is beginning to improve. This will help fill some of the suburban and some of the smaller spaces. And let's talk about the residential home market. It's finally showing some encouraging signs. I predict continued improvement in 2013, which will help spending, it will help jobs, and help commercial real estate. However, 2013 will throw some curveballs at the market, I believe. Deficit issues related to government spending, increased taxes to attempt to balance the budget. All this will tend to slow down the housing recovery. So I predict continued slow improvement in housing and new constructions. What are some opportunities? Well, if you need to own a home, you don't own a home, go buy one. Definitely do that. But as far as investing in single-family homes or investing in funds that buy single-family homes, I personally don't like that. I don't recommend that. I mean, the economies of scale are not there. I mean, if you have 20 homes, you have 20 roofs. If you have a vacancy, you have huge turnover costs. You have grounds, you have no income. So I don't like it as an investment vehicle, but I do like it. If you don't own a home, go buy one for sure. Well, let's talk about retail. Retail is really a tale of two markets. I mean, the sought-after locations and properties are doing great. I think they will continue to do so in 2013. Rents in these properties will increase and values will improve. On the other hand, the buildings that should not have been built are too far from town, let's say. They'll be slow to improve their performance. So opportunities in retail are in distressed acquisitions and in joint ventures. Many of the properties with loans maturing will need an influx of capital to work out existing loans. Well, another part of the retail market is the single-tenant net lease market. Let's talk about that. The long-term lease, single-tenant net lease investment market and sale-leaseback market is hot. It will continue to heat up in 2013. The search for safe yield and the promise of low interest rates through 2015 will continue to push demand for these properties. You think about dollar stores, drug stores, auto-related businesses, and even restaurants will see big demand in 2013. The opportunities there, one is to sell. I think if you own single-tenant net lease investment properties, 2013 may be a good time to consider selling. Also, if you run a company with strong credit and you own your own facility, consider a sell leaseback in 2013. Control the property on a long-term triple net lease and sell while buyer demand is so high and interest rates are so low. Another hot market in 2013 is healthcare and medical properties. Regardless of who's elected, baby boomers are getting older, they're living longer, and they have more active lifestyles. Healthcare properties should see further cap rate compression and strong buyer demand in 2013. All right, let's talk about land, the final frontier, right, where no man has gone before, well, hasn't gone lately at least. We've seen much more demand for land this year. Not for outlying land, once slated for single-family homes, an hour from CBD. But we have seen demand for closer-in residential land in good school zones. We've also seen incredible demand for apartment land in the right areas. And also commercial land is beginning to pick up steam. So if you have a use for land, obviously go buy it now. 2013 is the time. If you're an investor and you're looking for land, look for it in the right locations near job and education centers. Well, let's talk about distressed markets, banks. I think 2013 will continue to see more distressed properties on the market, short sales, some more bank-owned properties, and note sales. There's still banks, funds, and servicers with plenty of underwater assets that will be selling in 2013. We work with over 100 banks and servicers, and most of them will have assets to work through next year. So as far as opportunities, I would look for properties involving short sales is one area to look for. You get full due diligence rights, you get full inspection rights since the seller is still involved. And I think you'll see more banks and other lenders choosing to resolve troubled loans without foreclosing. They just don't want to get into those costs and those risks. We should also see more joint ventures in 2013. Underwater CMBS and bank loans require equity for the most part to get worked out. So more investors will bring needed cash and equity for existing owners. So if you own a property and you need equity to work out a loan, talk to brokers like me around the country. We all have cash buyers looking to co-invest with you. When it comes to buying notes to get to a property ownership level, make sure you know what you're getting into. And the cost and time to get from note ownership to property ownership can be a little tricky. I don't know what you're going to get into there. You don't have as much opportunity to do due diligence. Now, having said that, we've sold several notes and they've worked out very well for our lender and investor clients. So I think you'll see more note purchases in 2013. If you're a lender selling a note or a pool of notes, there are some best practices to consider. We've covered those in some of the other shows. I speak to bank groups on maximizing recoveries on notes in OREO. We don't have time to go into that today, but contact us if you want to bat around some ideas there. We're going to take a short break. When we get back, we'll talk about leadership from the president. What will that affect commercial real estate? I'm Michael Bull. This is America's Commercial Real Estate Show. We'll be right back. America's Commercial Real Estate Show is brought to you by Bull Realty. When your business requires proven performance, visit bullrealty.com. And Arnold Golden Gregory, a law firm that makes a difference. Visit agg.com. And Cone Resnick, providing forward-thinking advice to help navigate business and financial issues. Visit coneresnick.com. And by France Media, providing exposure to the world of commercial real estate. Visit francemediainc.com. Welcome back. I'm Michael Bull, and this is America's Commercial Real Estate Show. Well, today we're discussing 2013 opportunities, strategies, and what we think will happen. Well, let's talk about our president and how his leadership will affect the market. If you listen to the show regularly, I like to ask my guests about their opinion on the election results on jobs and the commercial real estate market. Well, here's my prediction. The election is coming up Tuesday. First, if Obama wins, I expect the same slow growth for the next 3 years that we've had the last few years to continue. So just slow growth and improvement. Look, commercial real estate, as we talked about earlier, in some ways takes care of itself. A few years of little to no new construction, and the industry cycles back to good times. Now, if he goes crazy with raising taxes on the job creators, the people making over $250,000 a year, and throws us back in a recession, then the jury's out. I think the Robin Hood taxing policies just takes the jobs from the very people he's trying to help. But I do believe we'll have just slow growth. I don't think the commercial real estate market is going to come crashing down. Now, if Romney wins, I predict the same slow growth in 2013 that we've seen in 2012. However, I think we could see more confidence from small business and stronger job growth beginning late 2013 and then more robust in 2014. So we could be doing the Snoopy dance as soon as 2014. The analysts say the election does not matter either way for commercial real estate, and I hope they're right. But I think what's different in this election is the confidence of the people who invest, the people who create jobs. While I think Obama will not hurt commercial real estate, I do think a Romney win will create more job growth and investment and could benefit commercial real estate as soon as 2014. So 2013 is the year of opportunity. We should see continued slow growth. We should see more transactions and more business for everyone involved in the industry. So know what you're buying in 2013. It is the time to buy. Take advantage of the good prices and the incredibly low interest rates. And don't follow the crowd. Remember this, if everyone at the cocktail party is talking about buying real estate, you should be selling. And if they're talking about how bad it is, you should be getting in. I guess you remember several years ago when everyone was talking about all the condos and all the properties they were buying at the cocktail parties. I'm sure you were thinking, there's a problem here, right? You better think about getting out. So contrarian investing, if you have the fortitude, can create great wealth. I've called some clients in a hot market who say, Michael, I'm glad you called me, but we don't buy unless we're in a down cycle. So it's a great time to be out there and looking at properties. This may be the best opportunity to buy in your lifetime. Think about this. In 60 months, rents and values will be much higher than it may be possible for many of us to comprehend right now because we've just gone through a severe beating, a recession based on real estate. But think about this. Construction levels have remained constrained. They will remain constrained. Lenders won't get over this very quickly. This market will cycle through to recovery. The economy will improve, and then we'll come back as inflation, right? So the result will be higher rents, will be higher commercial real estate values than many of us can really comprehend right now. Lastly, don't go it alone. Get experienced brokers and attorneys to help you through the process and to represent your best interest. An 8% cap rate on one property could be a steal. And then for the same property type, one block away, you may be paying way too much. So looking at cap rates and general market information without expert help on the individual property type, could be dangerous. Don't do it alone. So if you like to find professionals, attorneys, advisors, brokers in any part of the country, in any sector, give us a call. You can also go to our website, commercialrealestateshow.com. There's also a place there to find professionals. So if you are a professional and you're smart enough to listen to this show, you're a smart person, go ahead and put your information on the site so our listeners can find you. And the site is commercialrealestateshow.com. You can also reach me by email, info@creshow.com. And don't forget to follow the show on Twitter. The show's Twitter account is @CRE_show, and my Twitter account is @BullRealty. Well, next week we're going to have a great show on retail industry and retail real estate. Well, thanks for spending some time with us. I'm Michael Bull, and until next week, be sure that you always lead, learn, and laugh, and join us for the Commercial Real Estate Show.